Hello to all the debt warriors listening, and welcome back to another episode of Millennial Debt Domination. I'm your host, Katie Fata. With tax season in full swing, I thought it would be a great idea to have another CPA on the podcast to ask some tax-related questions and some financial-related questions. On January's episode, I was able to speak with Susan Allen from the AICPA, and she was able to answer some basic tax questions about preparing for tax season. Susan did an awesome job at answering tax questions for the beginning of tax season. On today's episode, we'll be diving into more of what a CPA does, not only for tax season, but how they're also just all-around financial experts. I'll be interviewing Nicole DeRosa. Nicole is a CPA and she is the senior tax manager at Wiss & Company. Nicole and I will be discussing what services a CPA provides, how you can separate your side business with your personal expenses, when you should set up an estate and trust, and much more. Now, let's get to my interview with Nicole. Hi, Nicole. Thanks for being on the podcast today.
You're welcome. Glad to be here.
Yeah, I'm definitely excited to talk to you today because we're going to kind of talk about CPAs and what exactly they do and what they can help you with. So I guess to start, what is the difference between a CPA and a regular accountant?
So, I mean, there's a big difference.
Okay.
Oftentimes, us CPAs are kind of lumped into just being, accountants or even bookkeepers. Sometimes you hear people calling us. But in order to become a certified public accountant, you actually have to meet specific state and, educational and licensing requirements and also pass the CPA exam within a certain period of time, which is not easy to do, which is why we would kind of joke in the profession, CPA, it doesn't really stand for certified public accountant, it stands for can't pass again. So it's kind of one of those things where, you pass a test and it's a really big kind of weight off your shoulder. And I mean, at the end of the day, anyone can essentially prepare a tax return. However, CPAs were held to higher standards, and while all CPAs are accountants, well, not all accountants or bookkeepers are CPAs.
Right. That makes sense. So how does someone know if they need a CPA?
So my rule of thumb has always been, if you're not sure, ask. Never assume, because especially when it comes to taxes, you'd much rather be safe than sorry. I'm obviously a bit biased here, being that I'm a CPA, but I mean, I've seen some pretty big messes created in the past, over the years by accountants, not on purpose. But with that being said, I've also seen a lot of instances where accountants did the job well and provided great services. But, the bottom line here is just make sure that whoever you are going to, whether it's a CPA or an accountant, that they are, reputable and, they're not just, John Smith posing off the side of the road saying, hey, I can prepare your taxes, or hey, I'm an accountant. Make sure you do your research and just always ask.
Yeah, there's definitely in my research, there's a lot of questions online that you should ask a potential CPA or accountant before you hire them, just to make sure, definitely.
Yes. And I always like to say, ask, friends or family, who do they use, and at least get some sort of a referral somehow, so you're not just kind of going in blind.
That's definitely some great advice. So does everyone need a CPA or an accountant to handle their taxes?
No, not everyone needs a CPA or even an accountant to handle their taxes. I mean, individual taxes can easily range from very, very simple to very, very complex, and everything obviously in between. A simple, individual tax return would be minimal activity, maybe just like a W-2 wage earner with maybe some interest income or something, while a complex tax return would be significant activity and, a lot of different moving parts, which I won't even get into here. Mm-hmm. For the more simple stuff, though, an accountant would suffice, or maybe you can do it on your own using, I hate to say TurboTax or self-prepare type of package, but for the more complicated, complex stuff, I would definitely advise getting a CPA involved. And as I mentioned earlier, if you're not sure about your taxes, just ask a professional for help, because the last thing you want is to unintentionally have an issue with the IRS, because I can tell you they don't go away very easily.
Right. Yeah, I guess you just have to look at your whole financial picture. Mm-hmm. So it's definitely different for everyone.
Yes.
Yeah. So what services does a CPA provide?
So a CPI can provide pretty much services ranging from, basic bookkeeping services to tax return preparation services, and again, everything in between. CPAs assist, when there's tax notices that are received, when, God forbid, you're selected for an audit, if, maybe there's some tax plan that needs to take place, and there's just so many other areas, trust and estate planning, if you have a business, business tax preparation and planning. If you're, charitable, there's certain, trusts that you can, set up, and the list is honestly endless.
Yeah,
So if someone's looking to start a business, CPAs can also, help assist there too. And really, CPAs deal with any and all things, tax and then more.
Yeah, more than that. Yeah, definitely. So if someone's deciding they're ready to meet with a CPA for the first time, what documents do you recommend they have prepared for that first meeting?
So if you're meeting with the CPA for the first time, and they're going to prepare your taxes, and it's already,
Mhm.
been discussed that that's the case, it's always extremely helpful to have your prior year tax return handy. Either, send it to them securely in advance electronically, or bring it with you. Being that we're obviously now in a more virtual environment, securely sending things is definitely obviously the way to go. Don't just attach it to an email and send it, because your social security number is attached there, and sometimes there's also banking information there, so just be careful on that. Your prior tax return is really the starting point, and the content of the meeting will be, that much more valuable, having that available just for reference alone. After having your initial meeting or your initial call, the expectation is typically that, you'll provide all the relevant tax documents to your CPA, either again by mail or electronically. A big piece of advice I would say is make sure that you do not over provide information or under provide information. You really want to kind of meet that sweet spot in the middle, because if you over provide, it makes the CPA's job that much more difficult, as they have to kind of sort through everything in order to find the relevant documents, which could ultimately lead to, more time, which could potentially equate to higher preparation fees. Obviously, the flip side, if you under provide information, you'll create more back and forth, which again provides more time added to the process by your CPA, which can again equate to higher fees. And just make sure you discuss expectations right off the bat with your CPA, and an agreed upon fee, so that there's no surprises when you're sent a bill for the tax preparation or whatever services that are going to be provided, just because again, you don't want to be surprised once the bill comes in the mail.
Right. You definitely want to talk about it beforehand so you
Mhm.
know what you're getting yourself into and keeping everything in order. So, aside from taxes, we said that CPAs do so much more work. So, I know they can help you maybe get your side business together, your finances ready for that. So, what steps should someone with a side business take to separate their business and personal expenses?
So that's a great question, and I
Mhm.
wish that, people would kind of think about this before they do it.
Right.
you know, we always tend to get involved after the fact, but first
Mhm.
and foremost, if you have a side business or a side hustle, open up a separate business bank account and keep your income and expenses separate. You really don't want to commingle personal expenses and business expenses, because it can get quite messy, as I'm sure you can imagine. And
Yeah.
it's a huge no-no in the case, of the IRS, or God forbid, state audit. So come year end, it's also much easier to quantify income and expenses if you have, a separate business bank account. Similarly, it might also be smart to open up a business credit card, depending on, what types of expenses and transactions you're making for your business. If you're paying with a business credit card, just be mindful. I always like to tell clients, save your receipts and do not
Mhm.
just throw them out, because unfortunately, credit card bills, that the detail on the credit card bill does not substantiate actual business expenses, but receipts do. So biggest piece of advice, just keep them separate, and do not commingle.
Yeah, I definitely can see how that can get messy if they are
Oh, yeah.
commingled.
Yep.
Definitely want to keep everything separate. So, can a CPA represent someone with a side business in all states their business operates? So, if they have, something they do and it's in different states, can a CPA represent them for that?
Oh yeah. We see it all the time, in fact. So many of, my clients own their own businesses, or have a side business, and, I'll help them out with their taxes on an annual basis, and also throughout the year for, various other reasons. But,
Mhm.
everyone's tax situation is different. Some clients and businesses require, work throughout the year, while others, only require work come tax time. And, some require special state and local tax assistance, while others don't. The beauty of my job is that I never get bored, because, everyone's tax situation is different. And
Right.
It's sometimes frustrating keeping up with all the changes at the federal and state levels because, not all states necessarily tax things the same or treat things the same. But, with that being said, I also have tons of resources available to me that enable me to properly assist these clients in pretty much all tax situations. And, state and local tax is a big popular niche, just because obviously everything changes so rapidly and so fluidly. So yes, we definitely represent everybody, not everybody obviously, but if somebody has a business in different states, we usually take care of kind of the big picture and everything and all things tax for them.
Yeah, I was gonna say maybe it could get tricky with all the different taxes in every state and stuff.
Yeah, I mean, luckily, a lot of states do follow the Fed, but it obviously, like I said, it keeps it interesting just because, again, we're never bored, but it's also frustrating in that regard too. But a lot of mid-size and even smaller accounting firms have a state and local tax specialist on their team, just because, again, it's such a hot kind of topic. So it's a great resource to have, especially if you're active in a lot of states. You don't want the states to come knocking. You don't want the states to issue notices, and it's just, you want to be as clean cut and as on top of your state compliance as possible.
Yeah, you definitely want to keep everything in order. So I guess having one CPA would help that rather than.
Yeah. Oh, absolutely. Yeah, I shouldn't say never, but oftentimes, if you're having one tax accountant prepare your tax returns for your business, it's, another tax accountant's not going to be in the picture for that. It's going to be the whole business done by, one tax preparer, one firm type of deal.
Okay, that's good. That's interesting to know. So, how often should a person meet with their CPA to discuss their taxes? Only during tax season or more than that?
So again, it depends.
Okay.
I feel like that's like
definitely.
the overall answer for a lot of questions, just because, in the profession, it really does depend. And, everyone has a unique tax situation. And I would say at a minimum, you should meet with your CPA once a year. If you have a very, simple tax situation, meeting with your CPA come tax time is kind of like the norm. But if you have a moderate to more complicated tax situation, you'll likely meet with your CPA throughout the year on a more than one occasion, more than like an ongoing basis. Oftentimes, meetings are now, held virtually, or even a phone call would suffice. And, at the least, you should be keeping in contact with your CPA so they're kind of in the know and aware of your tax situation. So you don't need to call your CPA every single time something small happens, but, big picture wise, since they're your trusted advisor, you want to make sure that they can properly advise you. And I always like to say, if something big is happening or might happen, you should probably let your CPA in on the news, because the worst thing that could happen is you make a decision that involves taxes without the guidance of your CPA, and there's negative tax ramifications as a result. And we never want clients to say, well, I didn't know, or well, you didn't tell me. So just keep that in mind and ask yourself, is this something I should probably let my CPA in on? And if the answer is maybe or yes, then you should probably pick up the phone and give your CPA a call.
Yeah, definitely rather safe than sorry.
Mm-hmm.
Yeah. So I think earlier you might have mentioned estates and trust, and you guys handle, a CPA can help you handle that. So when should someone set up an estate or a trust?
So in a nutshell, a person's estate is kind of all of their property owned at death. A trust is something that is set up prior to death and is used for estate planning. So upon death, you essentially want to mitigate any tax implications. So you want to essentially manage the estate. And this becomes very important for tax planning. So, how do you manage an estate? You can set up a trust to hold various assets during a person's lifetime. Trust and estate tax planning can be also, very, very complicated. Just like I mentioned, you have a state and local tax expert usually. Typically, you also have a trust and estate tax expert, just because it's so complicated.
Yeah,
so you want to make sure that you're speaking to your CPA who is well versed on this subject, because you can set up trust for various reasons. You to preserve assets for minors until they're adults, to provide for your family after death, or to provide kind of a vehicle to transfer property. The reasons to actually set up a trust are endless. So the timing becomes very important, and obviously, again, it's all based off of individual facts and circumstances. So there's kind of not really a one-size-fits-all answer here, but it's definitely something that you want to have a conversation with your CPA about.
Yeah, so can that help protect dependents from tax implications upon death?
Yes, it can actually. Absolutely.
Okay. Okay. Is there any other way you could help protect dependents from tax implications upon if you pass away?
I would say it's going to come down to the trust and estate tax planning and
Okay.
just kind of setting up the future so that you don't kind of run into like a oh no moment where everything, because obviously you have taxable events, right? And
Mm-hmm.
one taxable event is unfortunately death.
Right.
It triggers potential taxes. So you can't obviously plan when somebody's going to pass away, but you can plan for when it happens, what happens after the fact.
Right. Okay. So, since you're pretty, a lot about finances and financial planning, when do you think someone should increase their contributions to their 401k?
So I always like to advise people to max out your retirement annually, as it obviously helps, put away money for retirement, and also could help lower your taxes depending on, the type of retirement plan you belong to and your tax situation. It's important to note, obviously for 401k, it's not the same as an IRA, but
Mm-hmm.
you'll hear kind of these
Yes.
terms used interchangeably a lot. So 401k, is a type of employer retirement account, while an IRA is an individual retirement account. So for 401ks, the 2021 contribution amount is actually 19,500. Individuals who are older than 50 years old, they're eligible to make a catch-up contribution in addition to their regular contribution, which is 6,500 for 2021. So you really kind of have two timings here. You have like the original timing, and then you have the catch-up timing. So if you're not old enough to make the catch-up contribution, I would say max it out. Once you hit potentially 50 years of age, you're able to make a catch-up contribution, I would say this is something that you would obviously want to consider doing. For IRAs, the amounts are actually significantly less than 401ks. So, like I said earlier, 19,500 for 401ks. IRAs, it's only $6,000, and the catch-up is $1,000 as opposed to the 401k, which is 6,500. So, you want to take that into consideration. You also want to take into consideration the differentiate between a Roth and a traditional retirement plan, because they do have different tax implications, and it is important to at least understand the difference between the two. And for both Roth IRAs and Roth 401ks, you're taxed on the contributions at the time of the contribution. Down the road when you take out an eligible distribution, you're not taxed on the distribution. So essentially the earnings are not taxed, and it grows tax free. Alternatively, though, traditional IRAs and traditional 401ks, they're pre-tax contributions. So you're not paying tax upon the contribution. Your taxable wages are reduced by the amount contributed, but down the road, when you go to pull it out, your distributions are taxed. So just keep in mind the difference between Roth and traditional, and also just the different limitations and how much you can contribute on an annual basis. And again, I always like to advise people max it out if you can, especially if you have an employer who's going to match potentially, because that's kind of free money in a sense.
Yeah, definitely. And we have so much more information on 401ks and IRAs, all about that on our website. And I have other podcasts about it. So I will put them
Awesome.
in the description of this podcast so everyone can get that, so they can learn a little bit more about investing in your 401k, which I always recommend that, millennials who are listening to this should do it, as soon as they can.
Mm-hmm.
Definitely start investing in retirement as early as you can.
Yes,
Yeah.
I would
So,
agree with you 110%.
yes. Is there anything else you want to let our listeners know that you think we didn't cover or anything?
Just make sure you do have all your ducks in a row, for your accountant, your CPA, or whoever it is that you use. And, there's tons of resources out there, for CPAs, depending on, what state you're in. I would say that, most states do have a CPA state society that they have like a find a CPA, and they're reputable CPA. So I would use the state resources just to kind of, if you're looking for a CPA, start there. Obviously, just, make sure whoever you do decide to use, that they are reputable, just because I feel like people kind of come out of the woodwork this time of the year, and you don't want to kind of end up in a bad situation just by not doing due diligence of checking it out.
Right, that's definitely some great advice for people who are looking for a CPA. So thank you for being on the podcast today. I really enjoyed talking with you.
Pleasure. It was fun.
Yeah, I think the listeners definitely learned some things they probably didn't know about CPAs. So thank you for being
Talking,
here.
you know,
Yeah. So
never a
thank
dull moment.
Yeah, so thanks for stopping by today.
Thank you so much for having me, Katie. I really appreciate it.
CPAs are different from regular accountants, and they can help you out with way more than just your taxes. After you've assessed your finances, you can determine if you need a regular accountant or CPA. If you're planning on meeting with a CPA, make sure to have your prior year's taxes. Like Nicole said, send them to your CPA before your meeting so your CPA knows your previous financial situations. I think it's also important to note what Nicole said about sending important financial documents. Don't just send them in an email because they have personal information about you, such as your social security information. A CPA can help you with your side business as well. Make sure to keep your side business finances and your personal finances separate. With your side business, open a separate account, have a business credit card, and save your receipts. CPAs can also help you set up an estate and trust. As Nicole said, when to set these up are different for every person, but by setting them up, you can help protect your dependents from tax implications upon death. We've talked about 401ks and IRAs in other podcasts, but we haven't gotten to the taxes associated with them, so I thought Nicole did a great job on explaining that. She also recommended maxing out your 401k annually, which I thought was some awesome advice. Definitely do your research when selecting an accountant or CPA, and even ask your friends and family members for referrals if they have one. With that being said, that wraps up another episode of Millennial Debt Domination. Don't forget to subscribe to the podcast wherever you're listening, and if you're listening on Apple Podcasts, please rate and review us there. I'll talk to you next time, Millennials, Gen Zers, and everyone else listening. Bye.